today we take any category in India, we always say India is underpenetrated. We'll get into China, coffee, tea, auto, it's insurance, financial services penetration. It's important to realize BPC is the only category because of China. The online penetration actually in India today compares and stacks up with a developed market. 8% is the online penetration category thanks to a company like China. And that stacks up with some of the developed markets like Australia and US. So you're not looking at going there because you're talking about a future that could or may not happen. You've already done it. And that's where understanding the pain point of why it even happened and going into the history of it is extremely important. So I think to understand the numbers of Nykaa, there are four basic things that I think anyone can look at. Average order value, which talks about how much you spend and you want that to increase. Total number of orders, you want that to increase. Unique customers, you want more customers coming onto the platform. That tells you the stickiness from the demand side, and gross margins, you want that to expand, right? So the interesting thing is Nykaa on all of these metrics has had a constant uptick, be it an average order value, which has grown from 1,400 rupees to north of. Leave the fashion, which is the gray line, focus on the BPC, which is the blue line, because that's slightly mature business. Fashion will look high today because it's still too low. So I will not cover that for now. The number of orders again has been on an uptick. So has the typically a transacting customer on Nykaa roughly does 4 orders per year, which is roughly around 1 per quarter, which is what we've represented, along with the gross margins going up. Right. So obviously, there's no point of talking about the business model without some numbers. So effectively today you have roughly around 5.6 unique million transacting customers, translating to around total of 18 million transacting orders on the platform. Right. So when we say, and I'm here again, I'm just giving you a framework to think about it. So we're not talking about FY41, FY42 projections because the honest answer is I don't know. We're talking about how could these numbers evolve over the next 4 years, right? So effectively, assuming a 25% growth rate, 17.1 million orders going to 52 million. 52 million, even if you take 4 per quarter, roughly around, let's call it 13 million unique transacting customers. Is that possible? Because this is an Excel sheet model, right? So you need to triangulate back and say, can 13 million unique customers transact on Nykaa? So how do we think about it today? So again, just giving you a framework, let's today talk about Hotstar. There are 15 million as we speak unique paying customers on Hotstar. There are roughly around 11 million unique paying customers on Amazon, and Netflix is around 4 million. So over the next 4 years, though it is more of a women's space category, can it go to 13 million? It doesn't look like a abysmally high number. It can happen from a digital penetration perspective, right? Keeping the same gross margin numbers, you're talking about the BPC category, which is the DTC model, direct to consumer model, growing from a top line of 2,200 crores in FY21 to around 8,500 crores in FY26. Fashion segment, I don't want to spend too much of time on this because we still don't know what gives Nykaa the right to win in fashion. It is an extremely difficult business. You've seen multiple business coming, scaling, and failing, right? Because there's a reason for it, because fashion trends change every 6 months. So it is a question of managing supply chain, managing inventory, changing your inventory. So it is an extremely back-end operational driven business. There's one business in China which should do an IPO somewhere this year, irrespective of the kind of controversy that's happening in China, called Shein. People are talking about a $50 billion market cap as we speak, but very few businesses crack the fashion category. And I don't think anyone has the right to win yet in fashion. So let's not give too much of credence to fashion that they will be able to do it. Let's just leave it for now. The interesting thing is the B2B, right? If I was to give you a genesis of B2B, look back at FMCG in India. What did Unilever and the likes of Procter & Gamble do? There was a producer, there was a wholesaler, there was a distributor, and there was the retailer. And that's where we went and bought from as an end consumer. Guys like Unilever and P&G in the mid-90s changed this from a 2-tier mechanism to a 1-tier mechanism. And as a result of which, the margin take actually got reduced. And that disruption was done by these guys. In fashion, that still is a 2-tier mechanism, right? And Nykaa has a big opportunity, which is what they're getting into going into B2B, right? So is there anyone who's had success? I think the only private company that you can look at who's doing this for not high value BPC, but more so low value FMCG is a company called Udan, right? So just to give you the addressable market of BPC in India, you can look at the Unilever balance sheet for this. FY21 Unilever breaks down the total FMCG market in India is roughly around 1,50,000 crores, out of which they basically talk about, that's the entire category, right? So it includes a lot of low value products like your toothbrush, toothpaste, hair oil. Ignore all of that, then the total BPC is around 60,000 crores, out of which 15,000 crores is B2C and 45,000 crores or 50,000 crores is roughly B2B. So there is a big high volume game there. Obviously, the margins are going to be a lot lesser. And this is where we think there is a potential big opportunity for Nykaa to come and crack this. So we look at Udan's financials as a very similar, and we take a slightly conservative take on Nykaa's ability to crack this, but there is a big market share that Nykaa can take into this as we go ahead. Our outlook, so when we evaluate from a DCF perspective, we don't think Nykaa is unreasonably priced, right? So effectively looking at over the next 4 to 5 years, projecting the growth rate that we just did, if they execute on the B2B and scale up the B2C as we speak, without giving too much of credence to what they do in fashion, we don't think Nykaa is unreasonably priced as we speak. Now, obviously, there's a big network effect at play out here. So I just spoke to you about the network effect from the demand side. Now talking about the network effect from the supply side, right? So effectively what people need to realize is brands like, so let's take a story of a brand like Estee Lauder, which is a premium brand in the US. Estee Lauder doesn't sell online outside India. In fact, it doesn't want to be selling even in Amazon in the US because it doesn't want its brand to get diluted. However, Estee Lauder's India strategy actually happens on Nykaa. Has that happened before in any other country? It's happened through a brand called Sephora, where there is brand stickiness. So how do you measure this? So Nykaa basically talks about something called JBC, which is called Joint Brand Campaign. Brands globally are effectively launching their India strategies on Nykaa and pays Nykaa a marketing budget for this. That to me is supply side stickiness, right? So end of the day, can these effectively come into the retail market in India? It's very hard because retail in BPC has seen the highest bankruptcies globally. It's a very, very hard market to crack. And that's where there is level of stickiness. So then let's take a devil's advocate view on this. Talk about competition, because Nykaa has had a fair amount of success. There's someone called Purple in the private market space. So we did a basic analysis. Nykaa and Purple effectively focus on very different price segments. Purple focuses a lot more on the 0 to 500 rupees spend category, and Nykaa focuses a lot more on the higher end category, right? More importantly, what people need to realize is Nykaa operates through a warehousing based model. What that means is it gives them an ability to command higher gross margins. And why is warehousing model hard? Because you're taking inventory risk. Did Purple do this? Yes, that's how they started. They could not sustain, as a result of which they moved into a take rate e-commerce based model. And that shows in the EBITDA margins. Look at Nykaa's EBITDA margins versus Purple's EBITDA margins. It's a very big difference. Also, Nykaa is now moving offline, right? Roughly, it takes around 18 months for a store to break even at Nykaa, which means roughly every 24 months, each store is funding the next store. So it's not like it's operating a store in order to make a loss. That's certainly not happening. They're taking the online model and taking it in an online to an offline model as well. Finally, there's a big optionality in Nykaa. Why someone else? Obviously, there is a big thesis that anyone can do this, which I completely disagree with, but we can address that later if necessary. I think the Nykaa's brand experience has been built on content. Today, you speak to any influencer, they want to be on Nykaa building their own brand. Just to give some estimates, the top 2 influencers in China earned $2 billion each last year, right? This is still a very nascent market in India. There's a big option value around this. Can Nykaa translate its revenues through influencer marketing as well? We will see, right? We're not talking about value accretion from a minority shareholder because of this, but they certainly have influencer level stickiness. So I thought I'll stop here from a presentation point of view, basically just to give you the different levers that we look at and we value Nykaa on, and maybe look at answering more questions, which would be more interesting for the audience.